the Jet Setting Wealth Advisory Podcast, where your financial journey takes flight with David T.U. As an airline pilot and financial expert, David merges the aviation industry and wealth management to help you navigate today's complex financial skies. Each episode features expert insight, blending personal stories with essential financial strategies. We ask that you fasten your seatbelts and sit back as we prepare for takeoff. Our destination, your financial empowerment.
Hello, everybody. Welcome to the Jet Setting Wealth Advisory Podcast. I'm your host, David T.U., and today I'm joined by Mr. James Rainwater. He is a CPA and the Chief Executive Officer and Chief Tax Strategist at Rainwater.CPA. James is the founder of this boutique tax advisory firm, which specializes in helping 7 to 8 figure business owners significantly reduce their tax burden as a powerful tool for long-term wealth building. With a background that spans both public accounting and private industry, including roles as a CFO and the Director of Finance, James brings a unique, well-rounded perspective to tax strategy. Since founding Rainwater.CPA in 2012, he's been on a mission to create tax planning solutions that are not just smart, but specifically designed with business owners in mind. His firm is known for cutting through the noise and helping clients unlock real, measurable savings. And in today's podcast, we'll talk about how proactive tax strategy can accelerate business growth, the biggest tax mistakes that successful entrepreneurs and business owners make, and how James helped the clients that he serves turn tax savings into long-term financial leverage. So once again, James, welcome.
Thank you, David. Yeah, super happy to be here. I've been looking forward to it, and that is quite an introduction. Thank you.
We make you sound good, don't we?
That's fantastic.
So let's get started. So James, let's start with your journey. You've worked inside large national CPA firms and as a CFO. What ultimately pushed you to start your own firm focused solely on business owners?
Right. So I've always had a bit of an entrepreneurial bug. Since I was a kid, I started my very first business was mowing lawns in the neighborhood and kind of got the bug and went to college, got my degree in accounting and everything and worked, in the big national CPA firms, went to work for private businesses as CFO, Director of Finance. Really missed the client work. I really missed working with people, helping people. I'm an educator, helper by nature. It's just kind of my personality. I like to help and I like to educate. Working with clients really allowed me to do that. And then also working as a CFO, working closely with owners of small businesses, medium-sized businesses, allowed me to see the challenges that they faced. When I started the firm, I wanted to work with business owners and be able to fill that gap of the needs that weren't getting met for those business owners, especially on the tax side of things, because it's so complicated. I like big problems and I like solving big problems. So it's fun to work in that area. Thanks.
Fantastic. I'm a business owner myself, a small to medium-sized business owner. Rainwater.CPA, your firm, is known for helping 7 to 8 figure entrepreneurs, and we're probably talking about revenue, right? Their business revenue,
Right. Yeah.
7 to 8 figures, dramatically reduce their tax burden. What's the most common opportunity business owners are missing when they first come to you for a consultation?
The first thing they're missing is almost always clarity on what they're going to actually owe. Most people, business owner, not business owner, just don't know how much tax they're going to owe at the end of the year
Sure.
and figure that out in March or April. We try to help them figure that out now so that we know long before the end of the year what that tax is going to be so we can start doing some planning, making some strategies, or shifting money around in a strategic way to really help them lower that tax bill, which you can't lower if you don't know what that number is to begin with.
Absolutely. So we'll talk about strategies a little bit down the road here. One of the questions that we hear often is, how do I know if I've got the right CPA that is on my team, that is working for me, that is providing me value add advice? What should business owners actually be looking for when choosing a tax professional?
That's a great question. I think the most important thing you can look for is somebody that you can communicate well with. somebody that you can sit down, have a conversation with, somebody that's going to help you understand your situation. I think that's the most important thing. Beyond that, you obviously want to know they're a CPA, so they have some credential there. Do they have experience working with a client like you? Do they have other clients like you? Do they have a process for planning or compliance? What do those kind of things look like? But I think the most important thing is, can you communicate well with that person? And I think that's what drives the whole relationship.
So communication, very ultimately the most important thing to be able to get the messaging across. Let's talk about audit traps. Audit.
Audits.
Where do you see people accidentally raise red flags with the IRS just by filing incorrectly or other traps?
So when you're self-preparing a return, there's opportunities to put things in the wrong places, the wrong boxes, which can trigger, some of these computer audits, they're line item audits there where the computer just sees an anomaly on your return, automatically flags it for a line item audit. It's not the old school audit where they're auditing your whole tax return. They're just auditing your travel expenses on your Schedule C, for
Mhm.
example. So that's where I would never recommend somebody that has more than a W-2 self-prepare their returns. Beyond that, it's more of, are your deductions in line with the averages? If you have a flower shop and you're claiming $50,000 in travel expenses, that's probably pretty unusual for a flower shop. So the IRS will probably, trigger that for another line item audit. If you're in something like super risky, that may trigger a full-blown audit. But usually, if you're in a risky industry, if you're in some of the more risky industries out there, you would probably know if you're subject to that.
So, speaking of the risky industries, can you describe and tell us what you're referring?
We have clients in real estate is a little bit more risky because,
Oh,
there's a lot of cowboys in real estate and, will want to deduct a lot of expenses, be a little generous on the deductions. So we see real estate flagged more often than other industries.
okay.
Some like the cannabis industries, some of those can be a little bit more risky as well.
What's your experience with clients that are involved in investing with coins, buy, trade, sell, that whole thing? Would you consider that as a form of being higher risk?
Potentially, yeah. You obviously want to report that stuff well, and there's thankfully now software that'll help you do that. A lot of our clients have some sort of cryptocurrency exposure in their portfolios, and whether they're buying, selling, trading, farming, mining, there's all kinds of different ways to be active in that industry. They each have their own complexities and difficulties in tracking and reporting. So you at least want to have a good methodology. One of our defenses in audit is always having a strong methodology for how we're reporting those numbers. If you don't have a methodology or a way of calculating and reporting things, the IRS will come up with their own, and it's never going to be in your favor. So we always want to have a strong methodology for how we're tracking and reporting. And I think with cryptocurrencies, that's super important.
Fantastic. You've worked both as a tax advisor and a chief financial officer for a corporation. How does the broader experience change the way that you guide your clients now?
That's a great question. Thank you. Having worked as director of finance, CFO, I got to be in those board meetings with owners and CEOs on the operations side to see like what does it take to run a business. So, in one aspect, it gives me a really strong appreciation for my clients and what they're doing and running their businesses, but also gives me a lot of insight that I can share with them in my experience. I was a CFO in 2008 during the financial crisis, which was a super challenging time to be a CFO in a real estate centered building products company. So
Hmm,
that experience helped me a tremendous amount through the pandemic.
I see. Let's talk about tax strategies. Not every tax strategy has to be complicated. Would you agree with that?
Absolutely.
How are a few simple legal tactics or strategies that business owners can use right now by listening to this podcast or viewing this podcast that can help them reduce their tax bill?
There's so many, and business owners are certainly at an advantage, but there's so many more that apply to business owners versus non-business owners. But we just had the big, beautiful bill pass, and there's some exciting things in there, particularly around like 529 plans. where you have no limitations now on a 529 plan to be able to contribute, grow it, and use it for things like trade school now instead of just accredited colleges. So that's pretty exciting. And then the states have a lot of flexibility with that as well, whether you can deduct a 529 plan on your state return, limitations, and so forth. So it's pretty exciting the changes there with 529s. And if you have kids, that's a great strategy. HSAs I like a lot as well because a married couple can put $8,500 into an HSA. You can use it for medical expenses if you need it. If not, you can let that sit like a Roth and just let it keep adding up year after year and even roll it into a Roth eventually if that's what you want to do. We see a lot of goofy guidance around retirement plans, especially for business owners. And we like to talk about 401ks and profit sharing plans and Roth 401ks and really structuring that well to take advantage of those tax advantages, whether you're trying to get a deduction now with a profit sharing and retirement plan, or whether you want to utilize something like a Roth 401k. And those are becoming more prevalent now for employees as well, instead of just business owners. So those are some pretty cool ones. The TikTok hot tax strategy right now is the Augusta rule. You can rent, your business can rent your house from you tax-free and shift some income over into a tax-free bracket from maybe a high 30 or 40% tax bracket. So we like to use the Augusta. We try to set that up. That's one of our workforce strategies. We try to set up with almost all of our clients. If you have kids, hiring kids is a pretty amazing strategy. If they're under 18, they can do some legitimate work. We like to say at least 8 years old up to 18, they don't have to pay Social Security and Medicare. So that's a pretty exciting advantage if you have kids that can do some work in the business.
Augusta, 529, HSA, just to name a few. Have you ever worked in or have a discussion about management service organizations for business owners at all? MSOs or setting up MSOs?
No,
Okay,
I'm afraid not.
just curious if you are familiar with that. Let's ask about questions that I get a lot. The clients that I work with, they are typically high W-2 earners. Airline pilots do well. Typically, they're in the top 1 to 2% earnings. They're W-2 earners and typically don't have businesses or have very small businesses as a side gig and maybe have a couple of investment properties. So high income earners, W-2s, who traditionally or typically don't have businesses or maybe have very little businesses as a side gig. What are some of the legitimate strategies that you have used or are aware of that high income W-2 earners can help with their tax burden?
Sure. Unfortunately, there's not quite as many that are available to a business owner,
Right.
but there are some that are fun. We talked a little bit about 529s and HSAs, which are kind of the low-hanging fruit for a W-2 or for an employee. You mentioned real estate. I love real estate for high net worth, high W-2 earners. Whether you do long-term rentals, which you can take advantage of some tax-free cash flow from those long-term rentals. You may not be able to offset your other, like your W-2 income with a long-term rental, but at least you get some tax advantages and hopefully some tax-free cash flow from those properties. If you're interested in, and everybody's a little different, so not everybody likes short-term rentals, but short-term rentals usually come with some additional tax benefits where you get the tax-free cash flow, plus you may have some losses that you can use to offset your W-2 income and reduce your taxes further that way. We also, a lot of our clients, and sometimes it's political, we tend to, as a CPA firm, tend to not be political and just look at the tax aspects of something, but like oil and gas has some tremendous tax benefits for oil and gas produced in the United States. For drilling or fracking that's done in the United States, those tax benefits are fantastic and they apply whether you're a business owner or a W-2 employee. And there's some other things. We also talk about charitable giving. If a client is predisposed towards charitable or philanthropy, there are some great ways to set that up and structure charitable giving. They can offset their W-2 income and reduce their taxes that way. Those are probably the key ones, and we have a few other ones depending on what type of client we're working with could take advantage of.
Conservation easement or fee simple easement for tax mitigation.
Great question. So there's two pieces of the conservation easement. One is if I live on a farm and I have 100 acres on my farm, and I decide I want to place my farm into a conservation easement so that it can never be developed. There won't ever be 500 homes on my farm. It's placed into a conservation easement. I get a charitable contribution for that, placing it in a nonprofit trust. I get the charitable contribution and that reduces my taxes. That's a very legitimate strategy. I like it a lot, and that still works. There's also another type of conservation easement, which the IRS absolutely hates, which is called the syndicated conservation easement, which is where I buy into a partnership. That partnership goes and finds land somewhere. Let's say we buy it for 100,000. They say the land is worth 500,000, sort of donate it to charity or place it in conservation, and we all get this giant tax deduction. That's the one that's audited almost every single time. The promoters of that strategy have come under a tremendous amount of scrutiny, and we're not a fan of the syndicated easements, but we are very much a fan if you have property that you want to place into a conservation easement.
Direct ownership, converting that into the conservation easement, IRC tax
Yeah.
codes
With
versus
reasonable
syndicated.
valuations.
Okay,
Yeah.
fair enough. Just some of the ideas, food for thought that we like to talk about. So, with a lot of tax advice out there being overly technical or very vague, many people say, when I go talk to my CPA and I ask them a straight, pointed question about tax mitigation, about a tax strategy, and they seem to always come back and say, well, that depends.
Right.
So when we talk about vague, that's what we're referring to. How do you approach making tax strategy more understandable for the clients that you serve?
I mean, tax people are definitely detail-oriented people and like precision, so it always depends, based on the facts. But we at Rainwater CPA, we're a little bit different in that we always ask ourselves when we're meeting with a client, if I were in their shoes, what would I need to know? If I were in their shoes, what would I do?
Mhm.
So we're trying to be proactive with that advice by saying, if I was them, what would I do in this situation, knowing what I know about taxes?
Sure.
And try to explain that to the client. So, when you go to your CPA, that's why I mentioned earlier, like that key piece of that relationship is the communication. Can you have a conversation with your CPA? Do you understand what they're saying? When you guys talk, are they proactive with you and bringing things to you instead of you finding things on TikTok and going to them? Every firm's a little different. Some firms focus a little bit more on compliance than planning. If you're looking for suggestions and recommendations and avoiding that it depends answer, you probably want a firm that's a little more geared towards planning and strategy than a firm that, focuses more on compliance. The compliance firms are great. They're just not geared towards planning and helping you figure out different strategies.
Let's talk a little bit about the recent July 4th, 2025, one big, beautiful bill tax law change or add on, however you want to say it. A lot of buzz about this recent tax law change or tax law amendment. Can you walk us through some of the changes that you like and some of the ones that you don't like? And what is your overall impression of this new tax law?
The bill or the law fixed some things
Okay.
that were broken. And I really like that. It was able to fix some things that were difficult for some of our clients. The Tax Cut and Jobs Act, which was passed in 2017, a lot of those provisions were about to expire, which was creating a lot of uncertainty about taxation in the short term. And most of those were extended. Some of them were changed or tweaked, but most of those were extended. So now we have some certainty over what the tax, code is going to look like. In addition, one of my favorite strategies that our clients use is the R&D or research and development tax
Mm.
credit. And that was very broken, where you could take the credit, but you weren't allowed to deduct the expenses, which you were prior. to a couple of years ago. So that was creating a lot of problems, cash flow problems, especially for startup technology companies. So
Sure.
that got fixed in this new bill. I'm a big fan of that. The changes in the 529, I think, really needed to happen. Now you can use the 529 for tech schools and desperately need people to go to tech school in this country right now. So that's pretty cool. We had changes with tips and overtime. The big question now, I actually got this question earlier today. I get this question a lot now is, can I stop paying myself salary and just tip myself? Or can I have all my clients just tip me instead of paying my fee?
Would
And
be
it does
fantastic.
not work that way, unfortunately. We can't just tip ourselves. It has to be a job that normally, prior to the bill received tips, like a bartender or server or something like that.
In fact, I believe it's industry. They have it itemized in terms of industry and
It's very
the
specific.
the type of job specific.
And
Uh,
then the overtime is not as exciting as it sounds either because the only pay you can exclude is the overtime portion. So somebody gets paid time and a half for working an extra hour. It's only like that half piece that avoids taxation. The base pay for the whole 9 hours still gets taxed. So not quite as exciting. I think it's a little bit more political than it was gonna actually save anybody money, but that certainly helps people that are, working hourly and working overtime to reduce their taxes some.
and these are all temporary anyway. So there's
Right.
a finite time period. I think it's 2028. What's your thought on the $6,000 deduction that comes with the seniors that are over the age, I believe it was 62 or 65, but there's a income cap to these deductions that is built in there. And again, it's still a temporary. I think you get it for 3, 4 years, and that's about
Right.
it.
Well, my dad is certainly excited about that. I'm not
Okay.
quite there yet, but yeah, I mean, it's certainly helpful for somebody that's living on a fixed income. It's hard to deal with any changes really when you're on a fixed income, at 80 years old or 80 plus years old. So something like that, I think really helps, when we're in a pretty inflationary period with basic living expenses from utilities to food to groceries. I think that's an exciting help for our fixed income folks.
As you know about this new one big beautiful bill for taxes legislation that just came live and was passed last month in July, we are all concerned about our national debt and the deficit. You, as a CPA, it is your job and your value add to provide all the tax mitigation strategies that are available out there. So, when you help your clients reduce the tax burden for them, it obviously brings a lot of value, but it influences the national debt because there's less tax revenue that comes in. How do you weigh that and how do you balance this quandary?
Sure. You mentioned earlier that we only recommend legal tax strategies, and we're very much of the mind that you should pay the taxes that you owe. Our country functions on the tax revenue system. You should pay the taxes that you owe, but we don't believe in paying more than what you owe. There's no reason to pay above that. The Congress has written so many laws and put so many incentives into the tax code over the years. So Congress has put all these incentives in place for us to take advantage of, but it's so complicated that we need somebody like, not just myself, but the many, people that are learning the tax code, distilling that down to strategies that people can use to only pay the taxes that they're, legally required to pay. If we needed to raise more taxes to pay off the debt faster, Congress could certainly do that, and they may do that in the future. But as far as we're concerned, for the time being, we're only going to have help our clients to pay what they really need to pay.
Fair enough. So you're sleeping well at night
Sleep well at night.
as long as you're providing value to the clients that you serve, of course. And
Right.
fantastic. So, in your experience, what separates a business owner who stays stuck overpaying taxes from one who transforms their finances through strategic tax planning?
It's a great question. We recognize that taxes are complicated. Most people
Certainly
hate
is. Yeah.
taxes. Taxes are high on that list of things that they just don't want to do. They procrastinate. Everybody puts off dealing with their taxes. It's not easy to learn. The tax
No.
code is so complicated. There's almost 80,000 pages of tax code and regulations and IRS guidance. It's almost impossible for someone to figure it all out on their own. So a lot of people don't and put it off and kind of maybe overpay for a while. You'd be surprised how often we run into a business owner that hasn't even filed taxes in 3 or 5 years.
Wow.
So it becomes this mental thing more than what it is in reality. And sometimes it just takes sitting down and finding somebody that can help you and devoting some time to work through it.
Okay. So let's say a business owner wants to reduce their taxes and get some help, but doesn't know where to begin. What's the first conversation that they should have with their CPA, or what is the conversation that they should have in terms of the questions that they should ask?
If they want to talk to us, we'd be glad to talk to them and we'll drive that conversation and take a lot of that work off of their plate. If they're already working with a CPA, I would go to them and say, hey, I'd like to do a forecast, do some projections of my income and taxes for 2025. Can you help me figure that out and then help me figure out a way we can reduce that? Either they can, or maybe they'll say, hey, I'll send you over to so and they can help you. The other thing I've learned is that business owners know business owners. So ask your business owner friends, do they have a CPA they're working with that they're happy with that can, that helps them do these strategic things to help them reduce their taxes. So those are the kind of things that I would do to, get that ball rolling.
Okay. If you could give just one piece of advice to a business owner that's listening today who feels like they're paying too much tax, or it's just too much hassle, too much burden to deal with this, what would that piece of advice be to
Only
that business
one
owner?
piece. One piece. I think one piece is, knowing is better than not knowing.
Oh, I absolutely agree with you on that one.
Yeah,
Absolutely. If there is pain, you want to know how much pain and not be struck by a big painful surprise.
exactly.
And where can our listeners connect with you, learn more about your firm, and see if it might be fitting to work with Rainwater.CPA?
So thank you. We're pretty much everywhere at Rainwater.CPA, Instagram, LinkedIn. Our website is rainwater.cpa.com. You can reach out. I'm James at rainwater.cpa.com. Feel free to
Okay.
reach out to me and we can answer questions, give you guidance, or help you out.
Fantastic. And so for those that are watching on the platforms, you will be able to see the website that is right below the screen. And also, James did give his business email, also will be at the bottom of the screen. Any final words or final comments?
David, thank you. It was wonderful to meet and chat with you. And I hope we were able to, give some value to your listeners.
Absolutely. Absolutely. So, with that, we want to thank everybody for tuning in to this episode's Jet Setting Wealth Advisory Podcast. A very special thank you to Mr. James Rainwater for sharing his expertise on tax strategy and wealth building power of smart planning. And if there's any other questions, you can reach out to rainwater.cpa.com, which is the website. I'm David Yu, airline pilot, founder, and wealth advisor of DTY Wealth Planning Solutions. If you found value in this episode, please be sure to subscribe, leave a review, and give us a thumbs up, and share this with other business owners and entrepreneurs so that they can level up their tax game. Until next time, stay the course, think strategically, and continue building your wealth with confidence and purpose. See you next time.
Thank you for flying with us on today's episode of Jet Setting Wealth Advisory. If you enjoyed your journey through the fiscal skies with David T. Yu, don't forget to subscribe to our podcast and keep your financial knowledge soaring. For more insights and personalized advice, visit us at www.dtywealthplanningsolutions.com and connect with David directly